There is much debate about inflation and the trend of inflation and whether it is transitory or there's a permanence to it. Wyckoff gives us a special and unique perspective on this all important topic. And so let's have a look at some of the critical, important commodity markets and see whether or not they can tell us anything about the potential for inflation to continue, whether it could get worse or whether it could subside over time. So with that, let's get started. Hi, I'm Bruce Frazier. I'm your host, and this is Power Charting. Let's start with a look at the Nasdaq 100. It's a bit of a historical look. And you can see here, this is a 30-minute chart that goes back to May, June of 2021. And this is a reaccumulation type structure. It's beautiful in its completeness, its structure, its classic characteristic. And then notice this very big count, the blue area, is giving us a count objective of 15,920 to 16,420. And as of today, 10/27, when this is being recorded, we are very close to fulfilling this 15,920 level, very close to the point where we would almost be able to call this a hit if this is as far as it got. So let's look at some more information about this, basically this trend. And it's quite interesting that a 30-minute intraday point and figure chart back in May, June could point to this level. This yellow box, this yellow area represents what we just counted on an intraday basis. And there is the count that we just showed. Now, there's another count at work here, which is a count that took place in February to late March. And this count area also has a classic quality to it with a jump out, a run up, beautiful structure. And so let's see what that count potential. I want to show you one other count on the yellow shaded area before we move on to that. This is it here, and basically this is a daily chart of the Nasdaq 100. This is that period of May to June. You can see the 5 there and the 6. That represents the beginning of the months of May and June on the chart, so we can keep track of time on point and figure. This count goes 14,950 to 15,800, very, very close to hitting the top of the count objective range there. And notice that once we got into the count objective above 14,950, that a climax of sorts occurred and blew off into the top of the range of this count objective, and then was followed by a very important reaction down. And so this reaction resulted in a sort of a spring of this area, and now we've rallied back up to where we are now testing that prior high, that prior resistance area. And we will see whether or not that proves to be important resistance. What we would like to see, the bulls would like to see, would be some kind of a dull, quiet pause here or slightly above the prior high, and then consolidate that for a period of time and then keep going. Well, is there a case to be made for there being a higher price potential in this structure? Well, this was a chart, this period here. Now, this is again through October 26th. This is that February to March period. And here's the count. Again, this is confirming this count area here, which we just looked at. And here's the throw over of the top. Well, the question that I wanted to ask was, what if we took this whole area as a count? This is a very much a reaccumulation structure. And across this area, we have 33 columns, 50-point scale, 3-box reversal. So it'd be 3 times 33 times 50. This gives us a count in the area of 17,200 to 17,950. That's very interesting. Now, there is a reaccumulation, which we just alluded to here. And this reaccumulation across this area gives us a count of 17,550 to 17,800. This is a reaccumulation confirming count. These two counts confirm each other. Often when you get a confirming count that meets or is about equal to the count below it, and they are about equal, that's a timing tool and can tell us that this is when the market should get going again. This rally off this 14,400 low has been quite good, and it's been pretty straight up. And so there's a character quality to the rally that we like. And so we will see again whether or not it can hold these gains, consolidate very quietly in this area, rather than coming back down sharply like it did last time. And if it can hold here and then take off again, this really does put into play this higher number. And so with that in mind, let's turn our attention to the commodity markets and just have a look at the really big picture using point and figure analysis, because horizontal point and figure analysis gives us the capacity to be able to estimate or measure potential extent of a move. How far does a base or a cause result in the price increase higher over time? It can't tell us the amount of time it's going to take for the move to occur, but it can give us objectives. And so we like to segment those or break those down. This is a very old chart of GLD as a proxy for gold. And this is a chart that we did on December 31st of 2020. And here you can see an accumulation structure from 2018 back to 2013. And this is a classic accumulation across this area with a jump up and out and then a new uptrend. This area, we take three segments that we count. The first segment, A, was from the last point of support to the low, and this counted 192 to 202. Well, we went right to 194 and stopped, so that's a beautiful hit. This hit resulted in a decline. Now remember, this is only through December 31st, which has really been in place now for a year, because that climax high that occurred at 194 was back in August, September a year ago. And so now we are in a correction that is quite large, but keeping in mind that we're looking at a structure that goes back to 2011. And so this, these big structures just take time. And so we will follow this. Now we're into gold in October. It's still pretty listless and quiet, and we will see whether or not it can start to turn into some kind of an uptrend, with the next stop being 240 to 250 on GLD. And so it may very well be that only the first segment of this count is going to turn out to be the valid count for this structure, but we'll wait and see and look at what, determine what happens. Now, here's CRB. This is also a chart that goes back to December 31 of 2020. This is important because this gives us a sense of the pressures of inflation on the markets, on CPI, on inflation trends, on PPI. And this count here that was in the yellow shading, this gave us a count objective of 180 to 212. And at the time we took this, it was at 167, 168. So in fact, we did go up into this area, and I'm going to show you what happened subsequently. But I said at the time that it may be that we need to take this bigger count across here. And this count, which we have now taken, goes 2016 to 2058 with a midpoint of 2037. We'll often do that when the counts are really wide. And the reason the count is so wide is because this is a V bottom. So keeping that in mind, let's move ahead and look at what's happened since. Here is CRB on a, again, daily point and figure one box reversal. So much more detail in this. There's an upward stride here to this structure. It has sort of a reaccumulation quality to it in the green shaded area. But so here's a climax. Here's an automatic reaction. Here's an upthrusting action and a test of the low, secondary test, another upthrust, and this upthrust results in some kind of a spring or shakeout type event. And then look what happens. This now looks like a completed accumulation on a rising scale. It rallies very sharply up to the top, up to what we call the overbought line. And this overbought line, it now hovers at this area and then breaks it out and has a backup. So these are all classic characteristics of reaccumulation. And so now we have a breakout and a run. We take this count across here, and this count takes us up to the area of 230 to 249. Currently, we're at 241 with the potential to get as high as 249. Now, one thing we're noticing is that often, especially what we just saw with the Nasdaq 100, is that markets will form an accumulation or reaccumulation. They'll go up, form another one, go up, form another one, and each one of these is counted on its own. So it could be that the CRB needs to go sideways, consolidate, build a new count, and then after that, have another potential run upward. We'll know when we see it. So we will keep tuned into that, but there is still more potential for higher prices as we go up in CRB. So the inflation pressures continue. Now, we're looking at really large point and figure structures in here. Here is copper. Now, you can see that this seems to be a rather large structure. Well, look at the dates on this. We are here looking at September of 2021 on the far right, and way over here, this is 2007, a substantially long period of time. And this definitely has the character of a potential accumulation. And so this accumulation is quite large, and it begs the question, is there a cause built for a very large move, even from here in copper? And looking at this, you can see that there are three counts that we've taken. This green area represents our smallest count, and this is just taking from this low to this low, counts up to 530. Well, currently we're at 480. And so very close to fulfilling this objective of 530. Maybe that's a fulfilled count, but look what has happened. After this low was made, a change of character rally drives prices up and out of the structure. A very big deal, quite important. This is what we would call a sign of strength. And then it backs up here and stalls, making a series of higher lows through this area at the area of prior resistance, which is around 420. Then it rallies again, a little hard to see here, and now it's backing up again, but it's in a very tight range. If it can start to trend again, now we have bigger count potential to look at. And this is the yellow shaded box, which goes back to the 2009 lows. Again, a very big structure. So this count takes us up to 1480 to 1550. And so this count area here would exceed the resistance of this 480 high that we just have experienced with a potential 200% advance from these levels. If we take all the way back to 2007 and those lows and the full count potential, we get an objective area of 2380 to 2450. So could copper go much higher from here? The point and figure charts suggest that there's a gigantic cause that's been built. What would need to happen to really negate this would be to see copper come back into the area of the prior accumulation structure and then stall or even go back down towards the midpoint or the bottom. So there is a cause here to consider for higher prices in copper ahead. Natural gas. Now here is a structure in natural gas which goes to the 2009 lows. And so I've taken a number of different counts here. I'll sort of explain them to you, but you can see that there is a small cause built across this area right at the bottom in 2020, 2021, with a very sharp advance that goes up towards resistance, gives us a count to fit 550 to 6.25. This is from a low of 175. Then a second area is this area that goes to the green arrow, and this from this test of the low to this low in 2015 counts up to 1150 to 1250. Now that's a substantially higher count from the 605 area that we're at now. And if we go back even further, we see there's a great delineation with a sharp decline in 2012 that takes us down to the area of support at around $2 or 2. And so that area gives us a count across this zone to 19 to 1975. And then if we take from the tests all the way over to the 09 low, that takes us up to 29.50 to 30.25. This is a jump up and out. So far, we're holding above this level. This is $5. There's been a test. I say $5, it's 5. And so at 5, it pulls back. That's a backup type action. And now it's attempting to rally again. It's at 605. This count across here, if this does hold, we would then look across this whole zone, giving us a count 34 to 37.25. So this is a substantially higher level and suggests that if there is a rally potential upward in natural gas, that it could really have legs and go much higher. You know, for the sake of consumers, it would be great to see natural gas go back into the area of this trading range and stall there, stay there. We don't necessarily get a vote on that. We'll have to just wait and see what happens. We just let the charts tell us where they want to go. But you can see the trading action, especially this narrow area after a breakout, is looking pretty compelling from a pure Wyckoffian technical perspective. Now, there's more, and that is, here's natural gas back to 2001. Here is a structure. Now we've done 5-box reversal method. Scaling is 0.40, and this is daily data always. We always use daily data unless we're looking at intraday. But taking this whole area all the way across gives us a count potential that goes up to 5160 to 5580. This little area that we just counted here on the 5-box takes us up to the area of this resistance that was made in 2005. And so again, very large structure, very interesting. And we'll keep an eye on this to see, well, what's the next stop here? Is to get up to this resistance zone here, which is right at 10. All right, moving on. We have a lot more to cover because we're really looking for these raw materials prices that go into the components of uh, commodity and end products that consumers buy, that industries need, etc. So here's cotton. Cotton has got a structure that goes back to 2012. Here's a beautiful downtrend here. You can see these 2 points are, this is reverse use of trend line. Here's the intervening high, overbought line here, and a beautiful decline takes that out, backs up to it. Now it's building a cause. It's been building a cause since 2012. And so this area, look at this spring, very deep spring, or call it a shakeout of the important lows that have occurred in the prior years, 2015 and then 2012. The rally off the low goes right up. It's a little hard to see here, but the rally here goes right up to resistance and then consolidates in an ever tighter formation through here. And this tighter formation then is decisively jumped with an important rally that goes up to this 116 level. And now we take this green count of the lower area from the shakeout to the prior low, counts 188 to 210. And keep in mind, we're at about 108 here. And then the very large count that goes back to 2012 takes us to 308, 348. So there really is a large causal structure in cotton below this area. My good friend Andrew Cardwell thinks that cotton's a very important raw material, very important commodity component that goes into a lot of different products, and that this would represent an important inflation input. Continuing on as we run out of time, here are two interesting markets. Coffee. Now this is the Bloomberg ETN, coffee ETN, and this is a chart that goes back to 2018. And so a beautiful structure, classic kind of a pivoting action here with a hinge. And so there's a selling climax, automatic rally, up thrust, and secondary test, etc. And then a last point of support, up and out it goes. And now we have coffee rising ever upward. And so this is a near term, is a bit of a climax. So there might be a range bound market to here emerging that could be in place for a while. Here is sugar, another very important ingredient in many food products that we consume. And so you can see here that sugar has built a potential accumulation structure back to 2017 here on the vertical chart. Also note the relative strength. Again, now this is against the S&P. So notice how both of these are attempting to turn up against the S&P, which says to institutions that commodities are starting to lead prices up and are actually competing with stocks. So this is a very interesting look. And here are some point and figure studies. Now the top chart is sugar, one box reversal, 0.01 scaling. And so the low is at 0.10. This count back to 2015 takes us up to a count area of 0.36. Currently, we're at around 0.19. So still lots of room to run upward for sugar. Important resistance right here at 2014 or at 0.24. And so we would look for a potential pause in that structure here. You might want to take some time and count this and see what that takes you to. It might get you very close to the highs here, and maybe there's more count to be built in sugar, but lots of potential in sugar for higher prices from a pure technical point and figure perspective. And so let's hope that sugar for the sake of food prices, can stall, maybe even pull back some for a period of time. Below on the left is that Bloomberg ETN. That is a beautiful accumulation type structure from early 2021 back to 2019. And that count across this count line at 35 goes up to 87 to 92. Currently, we're at 55. And so, and also notice the nature of this consolidation, ever higher lows and pushing up against resistance. So it could very well be that this could pop out of here and then keep going, have a continuation of that trend. So coffee prices definitely could be under pressure to keep going higher, and they're quite high now. So now here is a longer look at coffee. This is the continuous contract for coffee, ATR scaling, and you can see here that this count goes from late 2020 back to 2013 actually, I think it is. And so this count we took in 3 segments across this area. And this was a very recent chart that I did, but currently at 208, the small count here, which is this area that we just looked at, counts up to 360 to 378 on the continuous contract. The green area added to that takes it to 432, 450, and then going all the way back to the 2013 low, that takes us 720 to 738. So again, large cause, big potential for higher prices in the area of resistance. And so seeing this come back down again, we don't get a vote. But if that was to come back down, that would take some of the pressure off inflation. It's truly an inflection point right here, right now. And so we would watch to see whether or not it jumps this resistance area and then can start to rally. And that would certainly indicate pricing pressures in the future. So this is an interesting chart, very little time left. And so I want to show you, as a matter of fact, I may circle back to this chart next week because it's quite interesting, but this is a 20-year Treasury bond ETF, and there's a beautiful uptrend in prices, downtrend in yields taking place in the 20-year US Treasury. And then this is high yield bonds, and this is a historic chart that was done back earlier in 2021. So we will circle back to that. And so we'll also come back to silver. That's a very interesting study. I'd like to spend more time on that. So let's finish up with uranium. Uranium is a chart that this is somewhat of a historic chart. 9/2021, September 2021 is when this was constructed. Very large count structure back to 2015. This is a uranium ETF. URA is the symbol, and a count of the smaller area goes up to 44, 50 to 48. And this is from a current level of 28. And so higher prices are definitely a potential for uranium. And already the uptrend has unfolded. And here's a smaller count of just the reaccumulation area, which is also a backup, and counts up to 3350 to 3675. And this is the vertical of the area that we just counted. And with that, gotta go. And we will come back and get to more of these markets next time. Have a great week. And thank you so much for spending time with me.